everyone, welcome to the Ichimoku charts.com daily analysis for the Euro-US dollar FX for Monday, September 30th, 2013. Well, this market technically continues in a downtrend, and I know it looks as though the market is trending up, but really since the market made this lower high and lower low here, we've had an outside day, an inside day, an outside day with these lows testing just below the previous lows, and today another outside day. So even though the lows of these candles are actually trading, they look as though they're trading higher, technically we don't have a change of trend, but there are some signs that we may have a change of trend, with 3 of the past 4 candles here being white body candles. Now with the current candle, the white body here suggests that the buyers have continued to make an amount of net bullish progress on the day between the open and the close, in line with 3 of the past 4 trading days. And that suggests that they are attempting to build some momentum to break out above this 135.49 level of resistance. This has been a level that's been tested on 1, 2, 3, 4, 5 trading days over a short period of time and been rejected from there. So it is very strong resistance, and if we can see a bullish close up above this area, there's a good possibility of the market trading to higher levels, and the next level is at 136.14. Now the market has closed with the buyers in control, so we do have the buyers with weak control by closing above the midpoint level, but certainly not strong control because they failed to close up at the high. Now the market also has very solid support extending down from about the 134.85 level down to around the 134.63 area, so solid support that's forming a decent base below where this market's trading at the moment. Now in terms of the Fibonacci extension, and here importantly we've seen the market testing once again for the 1, 2, 3, 4, 5 consecutive trading days, testing roughly around that 161.8% level, being rejected from there. So it seems as though the buyers are really attempting to find the momentum to change this trend to the upside, but with this strong resistance overhead, they are doing it tough when they actually finally trade up around this 135.50 area. And in terms of the Fibonacci retracement, once again for the 5th consecutive trading day, or actually 6th here, we're testing to around the 38.2% level and being rejected from there. This really does suggest that there is a possibility of a change of trend, but as I've mentioned, the resistance overhead is so strong. Now in terms of patterns in this market, it seems as though the market has formed some type of a rectangle pattern, or potentially a double top. There is a possibility of this being a reversal pattern or a continuation pattern. Rectangle patterns tend to be continuation patterns, so if it is a rectangle pattern, we are looking for a close up above the upper barrier, which is up around those highs. Or if it is a double top, we are looking for a potential close down below the intervening trough here, which is around the 134.60 area. So we definitely do have congestion here, but really this pattern is looking a little bit too big to be a rectangle pattern, and probably favouring more for it to be a double top. So really this suggests that there could be a reversal here, but really we can't preempt the market. We have to base our trades on evidence, and evidence would be a close up above this market or this area of resistance for a continuation, or a close down below the bottom of the pattern for a reversal. Now in terms of Ichimoku, we have a bullish market in the long-term time frame, with the market trading up above the cloud, and the market seems to be maintaining price activity quite well up away from the cloud. We are a distance away from the cloud, and the market is really being supported very strongly around the 134.85 level down to around 134.63. So a bullish market in that long-term time frame, and the bullishness looks to be quite strong. In terms of the Kijun Sen, the market is trading above the Kijun Sen, and we have a bullish market in the medium-term time frame. Kijun Sen is flat. Price action has attempted to be attracted back towards a flat Kijun Sen, so there still is a possibility of this market coming off, but the market is also trading up above the Tenkan Sen, and this really says something about the sentiment in this market, that the price action has maintained above that Tenkan Sen, giving us that bullishness in the short-term time frame, and suggesting that the sentiment really here is with the buyers, and suggesting that if that breakout does come, that it may be to the upside. So we will be looking for the market to trade up above the 135.49 level, extending up to about the 135.69 level. But what we want to see is a bullish close up above there for some confidence, and we could quickly see the market testing up to 136.14 if that occurs.